follows. What is important here, it is to actually calculate and do calculations of depreciations in all of what have been given here. Okay, let us start by, I believe that everyone knows that when you speak about asset disposals, you speak about assets that are being sold. Whenever you are asked of doing or preparing asset disposal, you must know that there is an asset that was sold. So our required, it's so you can see our required there, it's they said I must prepare asset disposal, vehicle depreciation, and accumulated depreciation. So let us do calculations first before we prepare anything, because without calculations you can't do an account. Let's do first of all depreciation. So depreciation of the new vehicle. Sold vehicle, and also existing vehicle. I have three types of vehicles here. Let's go to our, so this is the company Josh Traders. They say you must prepare these 4 accounts. The balance or the accounting period ends 29 February 2016. These are the additional information that have been given here. If you notice, number 1 March, the beginning of the financial year, so it starts 1 March 2015, it ends 29 February 2016. So this is a 12 months period. Okay, sorry for that. This is a 12 months period. So they say you must they say these are the opening balances that have been given here. This is the opening balance have been given, and vehicles 759, accumulated 297.50. Then on the 31st August they were selling this 180,000. Then 100,000 the selling price. This is the cost price, 180,000 rand. The accumulated depreciation on the opening balance at the beginning of the year, it was 60,000 rand. So this is a vehicle that has been sold. On the 1st of December 2015, this vehicle was bought 200,000 rand, but it was not recorded. Depreciation is provided 20% in diminishing balance method. Okay, let's go. When they say diminishing balance method, you must know that whenever you calculate depreciation, you have to say cost price minus accumulated depreciation. You must notice this. Okay, let's go to our new vehicle. New vehicle is number 3, 31st December. It means that December, January, February. So this is a 3 months period. So we're gonna just say there, since it's it happened on the 1st of December, we're just gonna say 200,000 rand multiply by 20% and multiply by 3/12. Then the answer that will give us is gonna be 200,000 multiplied by 0.2 multiplied by 3/12. Then it gives us 10,000 rand. So this is the depreciation of the new vehicle. Why we are not minusing any accumulated there? It's because it's a new vehicle. It has not yet depreciated. Number 2, sold vehicle. Let's go to our sold vehicle. Here, if you notice here, we have our sold vehicle on the 31st of August. We sold the vehicle here. So let's go. We're gonna take the cost price of 180,000 rand. Then we're gonna minus 60,000 rand. Then this will give us 120,000 rand. Then you're gonna multiply this by 20% multiply this by 6 over 12. Now why we are minusing here is because of the diminishing balance method. Cost price was given and also accumulated was given, so we have to minus this against each other because of this term, diminishing balance method. Then we have to multiply now the difference by 20% and by 6 over 12. Then the answer will be, let us calculate it together. Go to a calculator and press 120,000 multiply by 0.2. 0.2, yes, multiply by 6 over 12. So over 12 is gonna be, let me just redo it again, 120,000 multiply by 0.2 multiply by 6 over 12. Okay, so it's gonna be 12,000 rand. So that's the depreciation of the sold vehicle. Let us do another vehicle again. The existing vehicle now. Existing vehicle. Now this one, we have this vehicle here, 759,000. We have to minus the sold vehicle, 180,000 rand. This will give us an amount of 759,000 rand minus by 180,000 rand. This will give us 579,000 rand. So this is the cost price after deducting the sold vehicle. Then we have to now calculate accumulated depreciation at the beginning. So this is the cost price at the beginning, excluding the selling price, excluding the sold one. Now here we have 297,750. So this is the amount I'm talking about now, because now we want to know, after deducting the sold one from this money, how much will it be left, minus 60,000 rand, and see how much money is left there. I'm gonna say 297,750,000 rand minus 60,000 rand. This will give us 237,750. Okay, so 237,750. So this is the accumulated depreciation. Now we want to know now how much now is the depreciation. Sorry for that. How much now is the depreciation of the existing? We're gonna just take 779. So we're gonna take now 579. 579. Gonna just minus. Let's go. We're gonna take 579,000 minus 23,750. This will give us, let's see how much it will give us. It will give us 23,579,000 minus 23,750. 23,750, 7,750. This will give us 341,250. So this is the carrying value now. Now when you want the depreciation of this, now you just multiply this by 20%, multiply by this by 1. The answer will be, multiply this by 20%, the answer will be 68 250. That's the depreciation now. So we have depreciation number 1 of the new vehicle, depreciation number 2, the sold one, depreciation number 3, existing vehicles. Then we are done with the depreciation. Okay, now let us do the accounts now of this vehicle. We were told at the beginning that we must prepare these following accounts. We must prepare vehicle account, then just draw a line there. Another account that we were told to prepare is asset disposal account. Okay, let's go to another account. Another account that we're told to prepare. Okay, that's coming a bit. Then it's accumulated depreciation. Accumulated depreciation on vehicle. Then the last account that we are told to prepare is depreciation. Okay. So by nature, these accounts, you must also know the structure of these accounts. Yes, these accounts, you must also know the structure. You must know the structure. Now, for example, this one, we are going to just write everything here over. We're gonna have balance brought down. Gonna have here vehicle, the structure. Then you're gonna have here asset disposals. Gonna have here accumulated depreciation. Then when you go down, we have this accumulated here. In that, you're gonna have now balance brought down. Then here we're gonna have depreciation, and depreciation. So you remember we have 10,000. We have what we've calculated above, 12,000. Then we have 68 to 50. These are the depreciation of new vehicle, sold vehicle, and also the existing vehicles. On this side, you're gonna have asset disposal. You simply take 60,000 plus 12,000. Remember, 60,000 rand is the opening balance of the vehicle that you were given. I'm talking about this balance here. 60,000 rand, then plus this 12,000 rand then. So these are the vehicles that we have there. So it means we have 72,000 rand. Yes, then what we're gonna do here again, we're gonna take that 10,000, put this is a contra account, just do the transfer, then we just take 68 to 50 also. The contra account is gonna be accumulated depreciation, accumulated depreciation, accumulated depreciation. This is the same thing over and over again. So if you notice here, we have this. You can just total it up just to balance it, as they told us that we must balance these accounts. I think they told us there. It'll be 10,000 plus 68 250 plus 12,000. So it's gonna be 90 250 90 250 90 250. Then you close it off to profit or loss account. This money must go to the income statement if we were to do the income statement. Also here in accumulated depreciation, you can just total it up. Remember, balance brought down is 297 750, the opening balance that you were given at the beginning with vehicle. Then you can just total it up, this one, and then you're gonna have your total there. Okay, let's total it up so quickly, and just put this thing aside. Let's go. So now 297 750 plus 10,000 plus 12,000 plus 68 250. This will give you 388. Let me just look it again. 388,000. So just put this money both sides. 388,000. Then we're gonna minus this money here, this 7,200 from this money, because we are totaling up now. So minus 72,000 to give us 316, so 316,000. So this is the closing balance of what? Of accumulated depreciation. We are done with this one. You usually take this money to here as balance brought down under accumulated depreciation. Okay, let's come to vehicle. Debit, we have credit. Here we're gonna have 180,000 rand here. We are selling this one, so it decreases our here we're gonna have 759,000 is the opening balance we were given. I think you saw that above. And here we're gonna have the 200,000 rand. Remember the one that we bought, asset we bought. Gonna just write the creditors because it was not cash. So if they didn't specify, just write the creditors control here. Okay, then just total up, you balance your thing there. You just balance our account here. Just balance it. So it's gonna be 759,000 plus 200,000. So we're gonna get 950, 9,000, 959,000. Then you minus that 180 on that side there. So minus 180,000 gonna give us 779,000. So this is a carried down balance of the vehicle. This vehicle must become brought down on the debit side, 779,000 on the 1st of March 2016. This one is on the 31st of March 2015. It's carried down here. So we are done with the vehicle. Let's come to disposal now and finish off disposal. So you always put the cost price of the vehicle that has been sold here. Then here you will put your 72,000 rand, the total price of the vehicle sold. It's selling, it's accumulated depreciation. Then here you're gonna put now debtors control, because we sold that thing on credit. Debtors control, which is 100,000 rand. Then gonna now divide everything here. If you remember this 100,000 rand, just to 100,000 rand is there. This is 100,000 rand, 100,000 rand, 100,000 rand there, 100,000 rand. This one 180,000 rand, 180,000. Okay, here we are just going to total up our price here. 100 and it's gonna be 180,000, because debit is bigger than the credit. So the price, the difference is 8,000. So 180 minus 72 minus 100,000. So it's gonna be 80,000 rand. This is a loss. So why it's a loss? It's because it's on the credit side. So if it was on the debit side, it's gonna be a profit to our balancing figure. So if debit, it's a profit. If credit, it's a loss. Okay, I think that's all for this video. We are done with it. Every account has been closed off. Goodbye. I will meet you on another video.